What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 21st of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to address the growing concerns that people have had over Bitcoin's price. As many of you might know by now, we've had a 45% correction to the downside, and have really been pushing sideways for the last 3 weeks without any serious movement to the upside. So I understand the concerns, and I thought, what better way to address it rather than just doing simple technical analysis or me spewing my personal opinion than to turn to one of the best elements we have at our disposal, and that is data science. Now, for those of you who may not know, data science in the sense of analyzing crypto markets is taking a look at very interesting indexes or indicators that can give us a sign of when Bitcoin is possibly cheap or when it's overextended in this case. And we can understand through mathematical formulas how to be more predictable in our fashion of understanding Bitcoin, okay? And today we're going to be taking a look at Look Into Bitcoin, which is a free website you guys can go check out, and you can see all these indicators. I'll have it linked down below. But we're going to be diving through this today and taking a look at a variety of charts. And outside of that as well, we do have a sponsored bit at the end of the video talking about some key updates from one of our favorite projects, Energi, here on the DataDash channel. All right, so I hope you guys will stick around for that. Lots of exciting pieces, but let's go ahead and dive into this topic of Bitcoin's price and taking a look at some of the data science models we have. All right, so one of the most popular ones that are out there is the stock to flow model. Now, stock to flow is a general term that's used mostly in commodity markets, but it's a general assumption of the introduction, the new inflation of a certain type of commodity against the current available stock in this case, hence stock to flow. And as many of you might know, in the case of Bitcoin, Bitcoin has a very favorable stock to flow ratio as time progresses because there is, over a course of a set of few years, there is what's known as the block halving, right? Where basically the production of new Bitcoin cuts in half. And according to current estimates, we're still expected around May of 2020 to have this block halving where we can see a reduction, and we actually are going to see a reduction in the Bitcoin network of the amount of Bitcoin produced around every 10 minutes. Now, it's not always finite around 10 minutes, but it averages around 10 minutes. And this is why we can be predictable about this halving coming in May of 2020. Now, this really benefits Bitcoin in the long term because it plays into the idea that Bitcoin is the ultimate store of value. We are not in the case of gold, for example, where gold sees around 1 to 2% inflation pretty much every year and has seen that for the last 100 to 200 years. If you don't believe me, if you guys look up the data, there's actually a chart that displays, I think Business Insider did a chart on it. But it's the case for gold. And sometimes that inflation rate is pretty much on par with some currencies across the world. So we want something that can be deflationary, that can be absolutely finite. And Bitcoin gives us that. And we can see that being represented not only in the line here that shows the stock to flow ratio, right? This is showing over time how the ratio gets more and more favorable with the block halving. But along with that, we can start to see how price mingles alongside this. And also, we can see here on the right hand of the side of the index, we can see how the shade changes on the price on the certain day that it's aligned with as we get closer and closer to the halving, right? The more we get closer to this dark blue and start hinting towards this kind of reddish texture here, as we saw over here, and as we saw over here, we can see these are periods of time where Bitcoin's price really starts to take off. So to doubt that the block halving in this model of the stock to flow, plays little to no role at all would be quite arrogant in this case, because we've seen historically in the short period of time that we have in Bitcoin's history that reduction of supply, that boost in the stock to flow ratio, again, plays a big role in the case of, actually I would say not so much a boost, it's a reduction in this case, the amount of flow that's coming in the market in this case for the amount of stock that's available, right? We're cutting it each and every time we have those block halvings. So a very interesting chart here that I recommend you guys check out. Again, one of the more mainstream ones out there, but there's a lot of other ones as well. All right, so there's the MVRVZ Score as well. So I'm going to go ahead and read out the formula here just to kind of get an understanding, and I'll explain simply put how you can look at this. Okay, so it's taking market cap and USD value and minusing the realized cap. Okay, and we'll talk about what that means, but we're also dividing as well by the standard deviation of market cap. Okay, now let's go ahead and just explain what these terms are, right? So market capitalization, as many of you already know, is taking the current market price of an asset and multiplying it by the overall supply, all right? So you take the total supply of Bitcoin in this case, or the overall circulating supply, which is just hit actually 18 million recently for Bitcoin. So we only got 3 million Bitcoin left to mine over the next 100 years. But we basically have the market capitalization, which again is the price multiplied by the circulating supply. And in this indicator, we're subtracting it by the realized market cap, or basically realized cap is the proper technical term. And what the realized cap is it's taking the price at which each Bitcoin was last used and basically multiplying, or you could basically view it in this way. You can take the average of when these Bitcoin were last used on the blockchain, right? When was the last Bitcoin sent, right? And what was the price at that time? And then basically taking that average and multiplying it by the circulating supply, right? So what you end up getting is a much more smoother line that tends to move in much more parabolic run-ups with the cycles, and usually tends to bear off when we enter into bear markets, right? Because to be fair, Bitcoin is generally used as a speculative asset at this moment, or as a hedge of some sort, a growing store of value. And we tend to find that it flatlines every time we enter in towards a bear market. But lo and behold, when we do happen to step below, when we have market capitalization, right, stepping below realized cap, this is a sign to us that the market is oversold, because it's showcasing the vast majority of Bitcoin were last exercised at a higher price, and they're not being used at this lower range. So it signifies to some degree that it's oversold. And we can see historically every single time we slip slightly below this green band here, or generally in this range, this is where we can find value for Bitcoin. And it tends to be when we have our 75 to 80% corrections. And we can see it very clearly here. And you can also see it up here. So just to kind of clarify the indicator here, the index, whatever you want to call it, we basically have the blue line representing market cap dipping below the realized cap, which is the orange line. We can also see as well, when it extends back above, this is usually when we enter into bull markets. There is an expansion, a divergence between these two as we enter into bull markets, and also a convergence when we enter into bear markets. Hopefully that makes some good sense to you guys. But again, very clean index. It might be a little overwhelming, but you can see how the Z-score, the divergence in this case, is basically expanding. At any time we step above this red band, again, when we get in this zone, we should be a little bit concerned, right? We should be on our feet that we might be entering towards the peak. But we tend to see that in both three, just like how, for example, we step below the green band, we stepped above the red band all three times. So again, history repeating itself here, which is why these hold so much significance. Now, this is one that we've talked about, but it's a different variation of what we talked about. It's just a different way of viewing it. And this is the 1 year HODL wave model, okay? So this is basically taking how many UTXOs have been held for more than a year, okay? Now, we need to understand a little bit about Bitcoin before we can understand what the UTXO, what a UTXO is, and we need to talk about that, and then also what a HODL wave is, okay? So Bitcoin's transactions work in a model known as the Unspent Transaction Output model. And it's basically where we can get an understanding of when a transaction was last output due to this model, right? Basically, when you send a transaction, you're basically always generating a new address. You're sending some back to yourself, and you're also sending some to another participant, right? If Bob sent 1 Bitcoin to Alice, he's going to send 1 Bitcoin to Alice, but let's say he had 0.5 BTC left. He's going to send that to another address that he has the keys to, right? So that's an important thing to understand about Bitcoin, but without the complexity, right? We can get an understanding from the blockchain being public for Bitcoin when a transaction was last sent. And that allows us to know when, for example, not only a transaction was sent, but how much of the transactions haven't been sent in over a year. And if you take a look over time, you can see here that with each cycle, we're setting new lows for the amount of Bitcoin that haven't been sent in a year. And we've gone from an average range of around 26% down here, all the way up to a low here of around 41%. And we're currently sitting at 55% of Bitcoin not being moved in over a year. Now, there are a few things to keep in mind with this, okay? Yes, we have a growing number, We have a growing number of Bitcoin that aren't moving. One thing to dilute here in the sense of the bullish nature of this, the kind of scarcity that this is causing, is that if Bitcoin are being traded on centralized exchanges, it's not going to move on the blockchain. This is a very important and fair case to make here, all right? But again, we can tell here that as we tend to see bottoms in markets, right? This is again what's being marked as the bottom at the moment. We can tend to see it's when we start to see a spike up, basically in Bitcoin that are being held for a year. Now, why would that be? Well, the reason is because we're starting to see a growth in scarcity, right? We are starting to see less Bitcoin circulating. Again, as we started to see a decline here towards the peak, supply was abundant and price was getting overextended, and markets tend to come into correction when both of those elements come together, and vice versa, right? When we start to see a sense of scarcity, a lack of supply on the market, and price being cheap, it incentivizes bulls to pick up the price, to buy in and buy more Bitcoin, just like any other asset. Now, again, we've talked about this, and I would say that as much as I look into Bitcoin's chart here, I would say you should definitely go check out this thing by Dhruv Bansal. We've talked about this before on the channel. They did a lot of interesting Bitcoin data science, but my favorite is this chart they did. It looks like they did it in Tableau, which is an old data science platform I used to use. But you can see this beautiful chart here that shows the different time frames, and you can see how the longer time frames, the darker colors, the green, bluish colors, start to overtake the chart as we go more and more into the next set of cycles, right? So again, very interesting chart. Again, I'll leave this link down below if you guys would like to look at it. But there's two last indicators we're going to take a look at. And this is the 2-year MA Multiplier, okay? Now, this chart is actually very simple, as you can probably tell. It's basically taking a 2-year moving average of price. So it's basically wherever this green line is comparative to prices, it's taking the close of the last 2 years of price action. So every single day it's taking the last 2 years of closes, and it's basically averaging it under price. And the red line here is multiplying that value by 5. Now, how does that prove useful? Well, as we can see in the chart here, the instructions are to basically buy when we're under the green line. It proves that for a year or 2 years out, you are going to benefit, most likely, at least according to history, from buying when we go below the 2-year average in this case. But it also shows us that when we step above the red line, the 5-year multiple of that value of the 2-year moving average, then it tends to be a time where we can expect that the market cycle is almost over, right? Doesn't mean right when it gets above there we should sell it, but again, we should be wary in this case that the market cycle might be nearing its completion. Now, I want to be very clear here. This is not multiplying, a larger time frame. This isn't a 5-year average, right? The thing wouldn't be up here. It'd actually be lower in this case because Bitcoin keeps going higher in every cycle. What it's multiplying is 5 times the average, okay? So you can see, I'll give you a very clear example of this. So, for example, down here when the average was $5, if we go back up here, the average is around $25 at that same time, right? So you're multiplying that value by 5. And the reason this is a good indicator is it's showing us that we have excessively diverged from that 2-year average, which, again, we're already usually above for the most part, but when we step vastly above the moving average, and more specifically 5 times over that average, which is already trying to increase and catch up with price, it shows us that price could be overextended, right? That's the kind of general thesis here. And this 5-year average gives us a general time frame of when these cycles have been reached. It's proven itself in the past in all 4 major market peaks, right? So that's the idea here, right? 4 times out of 4 probably will play out the 5th time. But again, there's no guarantee. And the last one here that I really thought would be good to just take it home. There's a lot of people out there. I did a video a little while back talking about people claiming that Bitcoin was dead. And I gotta make a very fair point here, right, guys? I understand a lot of people got into Bitcoin when it was, upward from 10,000 to 20,000. Completely understandable point. I understand that a lot of people have bought altcoins and are down on those altcoins. Completely understandable. 2017 was the peak of a cycle. It was a maniac cycle where there wasn't any logic or sense. But when people start calling Bitcoin a failed experiment, for the people who have been here for a long time, who have understood what Bitcoin is, and have been holding for a long time, I think it's absolutely arrogant. Bitcoin is far from a failed experiment for an asset that has literally basically about 8 years of price action that we have to work with here. Well, I'd say maybe, I guess 9 years if you're really registering the exchange price action from back here in 2010, right? 9 years of price action in the market. And the vast, vast majority of its history, you have printed money. It has acted in this short 9-year period as a hedge, not only a store of value by any means, a massive return as well if you were to have bought in any of these years, right? So again, I think the one point that bears would have here against Bitcoin or skeptics would be to say, we've really got to see it come back up to 20K to prove as a valuable store of value and as a hedge for people who have bought in this range. And absolutely, I 100% agree. We haven't reached there yet. But I can tell you that because of the principles of Bitcoin, as we talked about in the stock to flow model, right? And as we take a look across these broad indexes that take things into account like market cap versus realized cap, the amount of Bitcoin being held over long term, setting new lows of people who aren't moving their Bitcoin, who aren't, again, distributing it off the market, who, again, are keeping in mind these multipliers. When I take into the account these things that we have at our disposal, when I see that the vast majority of Bitcoin's history has been a win to hold, this is something to take away, guys. I think it's very valuable, all right? And I'd like to know what you all think about this. Again, do you see what I see in these models, right? I'm not trying to be biased. You guys are welcome to take a look at any of these models here. I mean, we looked through most of them. There's a few other ones. There's the Bitcoin network momentum, the Pi cycle top indicator, reverse risk. Again, we covered the majority of it, though. And I definitely recommend you take a look at it whenever you get the chance. It's all free and accessible. So next up, I want to go ahead and dive into our sponsored analysis of Energi. There's a lot of interesting key updates on Energi, and as many of you know, they are one of my top 10 altcoin plays for 2019. Now, the first thing I want to talk about is the Energi 3.0 public testing. Now, for those of you out there who saw my top 10 altcoin video, you might remember that I mentioned that Energi is going to be evolving to Energi 3.0, where they're taking a lot of the framework that built Ethereum and they're melding that ability to develop smart contracts, build decentralized applications, and much more with their treasury and governance models. And I think this is a huge boost for Energi, not only because I think it will help evolve the technology that was Ethereum that has expanded to the DeFi movement and built so much value, but they're going to be able to foster and continue growth of these awesome projects on the Energi network with the governance and treasury model that they have, where in a treasury model that they have, they're pulling in more revenue than Dash, which is one of the biggest treasury models out there in the crypto space. And along with that as well, has the governance model, I think, to be able to really scale Energi in this case with the mixture of master nodes that has proven very valuable on the Dash network. So it's taking two of my favorite blockchain networks and it's putting it into one. And it's so amazing because this project, again, was founded by Tommy World Power, who's another YouTuber in the space. And I think we view things so alike in this case. But again, hats off to the Energi team. I'm really excited to see the public testing. If you guys want to get engaged with it, here are the links right here. I'll leave some important links down below in the description so you guys can find this information. Outside of that as well, the Energi defense has been hard at work. Now, as you all know, the Energi, or for those of you who are fans of Energi and might know, the Energi defense is a program within the Energi network that aims to protect its users, that it not only aims to educate and help people in managing their own keys in crypto, but outside of that as well, is aiming to combat any type of bad actors. And this is coming through the form of the Energi Bureau of Investigation. Now, the Energi Bureau of Investigation had a really big report recently, and that was that they recently discovered during the earn-drop campaign that there was someone through a mixture of a variety of false accounts who was aiming to produce $1 million worth of earn-drop earnings for themselves. So they basically generated a ton of fake accounts and fake IDs and tried to give themselves $1 million worth of Energi, right? So they were able to spot this, and what's nice about this, again, is that they're not only going after the perpetrator, which is pretty incredible. Most crypto networks just kind of, leave it up in the arms and say, oh, whatever, there's bad actors. There's always going to be bad actors. They're actually trying to discover who this individual is, trying to bring charges against them. But outside of that as well, this means that more Energi will be available for the circulating supply and it's not going to some criminal, right? So we actually have a fair distribution in the airdrop campaign. And I think this is so great. I mean, it's very difficult to go through the KYC and the proper steps to make sure that who is asking for Energi is a real human being. But along with that, I mean, to be able to spot big things like this, it's going to go a long way in the long term. To think if Energi became a success and some criminal had $1 million worth of Energi, and that obviously would scale to much larger, that would be detrimental for the network because those actors usually don't really care about the project and probably would just cause more fluctuation of price and not really add any value. Now, one other thing as well that's really interesting that I like, and this is just the kind of nature you get from Tommy and the rest of the team here. I mean, they're a global team across the world, and Energi is all around trying to leave an impact of some sort. And they recently started a campaign. This is, again, one of the many great works that they've done. One of them that I really like, though, is that if you actually follow them, they'll actually go about planting a few trees. So if you follow them on Instagram, which I already did here, and just gave them a quick follow, and you guys should too, just to keep up to date with Energi if you're interested, not to mention it's always good to know you can plant a tree. But you can follow their Instagram. In this case, you're going to help the planet, which I think is really cool. It's a simple thing. Like, planting a tree in this case is a really great way to kind of contribute to the environment, and it's actually not crazy expensive. So again, I would, not to mention when it comes to just being able to, click a page and follow something that is an interesting project in the crypto space, I think it's a good step. And another thing as well, just wanted to share this. This was back during the summer, but this is, again, another one of the initiatives they did where they basically got a ton of food and gave it to locals in their community. So if you guys want to check out these things, again, I recommend getting engaged in the Energi community. But all in all, I got to say, Energi has come a long way over the last few months. I'm really excited about Energi 3.0. And if you guys have anything you want to say about Energi, leave it down in the comments down below. And definitely get engaged with their social channels. And last but not least, let's go ahead and end the video by taking a look at a video that summarizes all that's going on with the Energi ecosystem.
So to explain Energi as simply as possible, there's basically 4 major technical cornerstones and a 5th variable that's also very important. One is a smart contract platform, essentially like Ethereum has. Ethereum already has that. Ethereum's been really innovative, and we're friends with Ethereum, We love Ethereum. We've seen what happens with good smart contract platform. The next is governance, and this is extremely important. That needs to be there to be able to handle the changes or hacks or anything that might occur. We do see competitors that are going for the smart contract and governance value add as well, but what they're missing is the 3rd very important component here. That is having a treasury. Not only do you need to have smart contracts and you need to have governance, but you also need funding. This is where the treasury comes in. Energi has the strongest treasury in the space. This empowers us to grow more than any cryptocurrency. If you imagine Bitcoin with our type of treasury system, they'd have billions of dollars to spend per year. This is something I've been saying since before Energi was even launched, and Energi has that, an extremely strong treasury to drive our growth, to expand our network, expand our capabilities, and provide services like defense for our users, which I don't know any other cryptocurrency doing that. The 4th component there is our masternodes and staking. We give a strong incentive for users to support our network with masternodes and staking. We actually have pretty much the highest sustainable reward. That makes users strongly incentivized to support our network to the maximum capabilities. So these are the 4 major cornerstones. But even if you have all these right, the 5th component that is a huge differentiator is the quality of leadership. That means being able to see those things that need to be done and move in the right direction. And that's what we seek to do with Energi. I'm paying attention to the highest potential value things that Energi could focus on, and that's the type of thinking that I want going into Energi and where Energi utilizes its funds. This is what I see that sets us massively apart from the market, seeking to be top-notch in all of these.